Subscribe to my channel Report Stock.
So, have you ever wondered what's really driving a company's stock price? You know, beyond the big headlines you see every day. Today, we're going to try and cut through some of that noise. We're doing a deep dive into Medtronic, that's ticker MDT. We'll be looking closely at their recent Q1 earnings report, the one that ended July 2025, and trying to figure out what it signals for their future. Our mission here really is to pull out the key insights from the financial documents you shared with us. We want to understand what these reports actually tell us about a major player like Medtronic and where they fit in the market.
Yeah, that's spot on, because these financial reports, they can look pretty dense, right? Almost intimidating at first glance. But honestly, they offer these incredible, almost like X-ray insights into a company's health, its operations, its potential, if you know where to look. So yeah, we won't just cover the the numbers themselves. We're going to really dig into the why it matters, especially in the context of the medical device world, which is, well, pretty dynamic.
Okay, great. Let's unpack it then. We've got Medtronic's Q1 report ending July 2025. And right off the bat, numbers look strong. They reported $1.26 per share in earnings. That easily beat the Zacks consensus estimate, which is $1.23. And for you listening, the Zacks consensus estimate is basically the average forecast from key analysts tracking the company. So that's an earnings surprise of, over 2.4%. And revenues, also strong, $8.58 billion. That beat estimates by about 2.5%, and it's way up from the $7.92 billion they did last year. What's your immediate take on those headline figures? Does it say something about their consistency?
Well, what's fascinating here is this isn't really a one-off event for them, not at all. Medtronic has actually beaten these EPS estimates consistently 4 times in the last 4 quarters, and they've beaten revenue estimates 3 out of those 4 times. So it's more than just a pattern, it really points towards some impressive operational discipline, predictability even, in a sector that can be quite volatile for investors. That kind of consistency can be really valuable. Maybe signals a more stable, perhaps a defensive kind of investment, even if it's not explosive growth. And the market, clearly it seems to like it. Medtronic shares, they've added over 16% this year alone. That's significantly better than the S&P 500, which gained about 9.7%. That kind of outperformance, well, it's a strong vote of confidence from the market.
16% is definitely noteworthy. But, as savvy investors always say, past performance doesn't guarantee future results, ever. So the really crucial question for Medtronic and for us here, what does the future look like? How do we even gauge that, especially when the recent past has been so strong? Our source material mentions the company's earnings outlook, these consensus expectations, how they've shifted. This is where it gets a bit trickier, right?
Absolutely. This is exactly where we shift gears. We stop looking in the rearview mirror and start scanning the horizon ahead. There's empirical research, actually, that shows a really strong link between near-term stock movements and trends in, earnings estimate revisions. And earnings estimate revisions, for everyone listening, that just means when analysts adjust their future earnings forecasts for a company, either up or down, based on new information they get. You can track these revisions yourself or, use a tool like Zacks Rank, which is designed specifically to harness the power of these revisions. Now, what's particularly interesting here is that just before this latest earnings report came out, the trend for Medtronic's estimate revisions was actually, mixed, which means some analysts were pulling back expectations a bit while others were maybe raising theirs. That kind of divergence often signals some underlying uncertainty, even when the headline news seems good. So after factoring in this new earnings report, this internal analyst debate, it translates into a Zacks Rank #3. That's a hold rating for the stock. Essentially, yeah, despite Medtronic's strong recent performance and that market beat, the shares are now expected to perform more in line with the broader market, at least in the near term.
Wait, a hold? Really? Even with those consistent beats and outperforming the market like that? That genuinely surprises me a bit. What factors are the analysts focusing on then? What's tempering that enthusiasm in their future estimates, despite the track record? What are the actual consensus estimates looking like for the next few quarters that lead to this hold?
It's a really important question, yeah. How do you interpret that hold? So for the coming quarter, the consensus EPS estimate is sitting at $1.33. That's on expected revenues of about $8.73 billion. And if you look at the full current fiscal year, analysts are forecasting around $5.55 in earnings per share on revenues of roughly $35.29 billion. Now, whether the stock's price can keep moving up strongly in the short term, given these new numbers and future forecasts, that's going to depend heavily on what management says. On their earnings call, that's often where companies drop hints about competitive pressures, maybe updates on their R&D pipeline, shifts in market demand. Those are the things that can really influence future estimates, even if the last quarter looked fantastic. It's like they're They're sharing the ingredients for next season's performance, not just celebrating the last win.
Right, the commentary is key, and it's not just about Medtronic in isolation, is it? We always need to zoom out a bit, look at the wider industry. Medtronic operates in the Zacks medical products industry. What does the health of that industry tell us? How does it usually influence the companies within it?
Oh, it's a critical piece of the puzzle, absolutely. You can't analyze a company in a vacuum. The medical products industry right now is actually doing quite well. It's sitting comfortably in the top 39% of the 250-plus industries that Zacks tracks. And our research consistently shows that the top half of these ranked industries tend to outperform the bottom half significantly, often by more than 2 to 1. So on paper, at least, Medtronic is operating with a pretty favorable wind at its back. It's definitely in a strong neighborhood industry-wise. But, and this is crucial, a rising tide doesn't necessarily lift all boats equally. Not by a long shot. To really illustrate this point, let's just quickly look at another stock from this exact same industry, Air Wellness Inc. Now, they're expected to post a quarterly loss of 29 cents per share in their upcoming report for the quarter ending June 2025. And that loss is actually projected to get worse by about 14.7% compared to last year. On top of that, their consensus EPS estimate has been revised down by almost 2% just in the last month. Plus, their revenues are expected to be down over 5% from the year-ago quarter. So quite a stark contrast within the same sector, isn't it?
Well, yeah, what a difference. Okay, so let's try to wrap up our deep dive into Medtronic here. We've kind of uncovered this interesting paradox, maybe. A company that's consistently hitting its earnings targets. Stock's been outperforming the S&P 500. It's operating in a highly favorable industry. Yet the Zacks rank pegs it as a hold right now. And that comparison with Air Wellness really drives home the point that even in a strong sector, individual company stories matter a lot.
Couldn't agree more. While Medtronic's past performance is, well, undeniably strong and consistent, the future outlook, especially for near-term stock movement, really hinges on that management commentary we discussed and those earnings estimate revisions. For Medtronic right now, those factors seem to be pointing towards performing more in line with the market, which is a key distinction from its recent outperformance and the overall strength you see in its industry group, which, raises an important question for you, our listener. How do you personally balance a company's impressive track record and strong industry position against its near-term earnings outlook and maybe a hold rating like this? What factors do you think are most influential when trying to predict future stock movement?
Yeah, and building on that exact point, given the really varied performance we just saw, Medtronic doing well, Air Wellness struggling, even within a highly ranked industry like medical products. What specific things, maybe innovations or shifts in the market, might be causing such different results for companies supposedly playing in the same field? What might really differentiate a company that's set up for continued success versus one that's facing some serious headwinds, even when the overall industry tide seems to be rising? Something to definitely consider as you digest all this.
Subscribe to my channel Report Stock.